Hey guys, it's your boy HLOX the Matrix, guys. I'm back again with another video, guys. So on today's video, it's a video where I took a loss, guys. Yes, this is one of them videos where I took a loss, guys. As I promised that I won't be posting some winning trades only. I'll also be posting out some losing trades. So yeah, guys, we were expecting to take out some previous days low. Turns out that our previous day's low acted as a resistance. As Michael said, I'll post a referral video talking about such situations, guys. So yeah, this is the low from 1 hour. As you can see, it acted as a resistance and went back up in past leaf. So when the NFP started, it went up. So here we created a short term, made a run on Asian high there, came back to take out our short term low there, created imbalance from there. As you can see, that impulsive move left in fair value gap that right there, guys. So we put our buy limit, sell limit there, expecting that it will come back, and we will enter at the 70.5% sweet spot. But as you can see, guys, it took us out. That was not the entry, guys. We expected to enter from there, so it took us out, guys. So yeah, so yesterday NFP news, guys, that's the one that stopped us actually. I had hoped that maybe it will go according to my analysis, but it went against my analysis. My analysis, yeah, my analysis. Yes, analysis. So yeah, guys, it took a loss. I would have entered there, as Michael said, that if it comes back to retrace to our 76 spots, you can also take it on the OTE, but that's not my trade, guys. So yeah, that was the loss I took, guys.
Okay, when to expect reversals? When the hourly or 60-minute chart trades to an obvious old high or old low that has shown a clear willingness to reverse price before in the past, okay? When it's obviously seen a reaction that pushes price the opposite direction once it's been traded to it, this is most likely going to repeat itself. Now, sometimes price will not respect an old high or low, and these generic support and resistance levels will give way, and we never really know for sure. So I know what you're going to ask me is, how do I know if the old low or high is going to hold price and cause it to reject and go lower or higher? And the answer to that question is, I don't know that. Think about that. It's probably unsettling, I know. I know some of you want to have that answer, and I wasted years believing I would find it. And I found out you don't need to know that. Sometimes you're going to mess up, sometimes it's going to be wrong, and sometimes you're going to get stopped out. And it is what it is. You cannot escape it. You're going to lose money. You're going to lose on trades, and there's no reason to worry about it. Now, it's far better to expect them to cause a reaction than not to. Why? Because there's plenty of moves and price swings between these key time frames and higher time frame price points that you shouldn't have to worry about it. So there's a plethora of setups that will be forming between these 60-minute reversal points or old highs and old lows to not have to worry about it. So here's a little bit of logic for you. If you knew you're about to take a trade and it's going to quickly encounter one of these reference points on a 60-minute chart, an old high and old low, where it's shown classic support and resistance characteristics, maybe that's a trade you don't want to take. Or if you're going to do it, be very, very nimble about where you're getting out at. Don't anticipate a run through that low or that old high. In this example here, and this is real world examples, I've done this actual trade based on what I'm showing you here this week at the time of this recording. So those individuals that follow me on Twitter, they know exactly what I'm talking about, and you can go look at my Twitter and you'll see it for November 10th, 2017. So we have a old low on the hourly chart here for British Pound USD, and as price trades back down to it, we would anticipate a measurable bounce or potential reversal. So that means we don't really want to be selling short around that time because it may encounter some measure of bullishness, or at least an unwillingness to go lower. So if we use the logic that we may anticipate a rally higher, we can look for optimal trade entry longs in a New York session on a reversal basis, not a continuation of what has been seen overnight in London. So eventually, if we see that 60-minute chart move higher and break a market structure as we've seen here, then we can look for the following day to do a standard classic buy day, which you'll learn about in my tutorials. And the market trades down, gets an optimal trade entry long at the London Open. And like myself here, I was only 7 pips away, 4 pips if you're using the spread from the very low of the day, calling about an 80 pip move or so intraday. And very, very nice run as a result of it. But the 60-minute chart is going to help you ferret and filter when the market most likely will reverse.